Hey, what's up? Are you an investor or thinking about investing and you've heard this term hard money thrown out there, but don't know exactly what it means? Well, right now I'm about to go over it and you're about to find out exactly what hard money is and what it means. You ready? Let's go. Hey, what's up? It's Chris Martin. If you have not already, please subscribe to the channel. Hit the notification bell so you can get notified of future videos. I would highly appreciate that. Thank you. All right, so hard money. This is a tool that a lot of investors are using. Even when you hear an investor say that they're going to buy the property for cash, a lot of the times it may not be purchased for cash. They may be utilizing hard money on the back end. So they can still eliminate the mortgage contingency where it's not contingent upon a mortgage getting approved because they have hard money already lined up on the background. They've already been in communication or pre-approved with their hard money person. And the main difference between hard money and traditional financing is the timing of it. So with traditional financing, if you traditionally finance a property through a bank, through a mortgage lender, it's going to take 30 to 45 days to close on that property. With hard money, you can close on that property within days. You can get that funded within days. There's a smaller window of turnaround time, so it becomes appealing for an investor to be able to utilize that as a tool to talk to a homeowner and say, hey, look, are you looking for a quick close? I can close on this in 7 days, 10 days, 15 days. Whatever that time frame is, they can utilize that hard money to do it. You typically don't have to jump through as many obstacles and hoops as you would a traditional loan. If you've ever qualified or been through a home buying process using a bank, you know that you can be asked the same question 50 times. Provide this document, do this, do that, blah, blah, blah. Well, with hard money, you basically are showing the project itself, what you're acquiring it for, how much you're putting in for renovations, what the ARV is, the after repair value, all these things that are going to be deal specific, and that way that person can be next in line to take that property and know that they're getting into a good deal and that the risk is going to be low. So hard money is finance. You're financing this deal just like you would a traditional deal. However, most of them come with shorter terms. So instead of it being a 30-year mortgage, you're looking at a lot of a shorter time frame, usually 6 to 12 months. So a hard money loan you're getting from a 6 to 12 month period, and the interest rates are going to be a lot higher. Traditional loan in today's market, anywhere between 4 and 6%. On a hard money loan, they're going to be anywhere between 10 and 14%. So they're going to be double what your traditional loan would be. Well, Chris, why would you pay double? Well, again, if you can utilize it for a short window of time and you're coming out of pocket less overall, because some of these can be 100% financed, not all of them. Up front, you're paying for points most of the time. So you're paying 1, 2, 3, 4 points in addition to the higher percentage. So you might be paying 2 points and 12%, and that's what it's going to be. You're paying 2 points up front and 12%. Some hard money, you can even take that carrying cost and add it onto the back end. Not a lot of them, but some of them, you're able to do that. So your carrying costs are going to be lower and you're just paying it from the proceeds once you actually sell the property. So it is a little trick of the trade when it comes down to investors. When they're offering cash on the back end, they may be kind of exploring their options and figuring out what makes the most sense. Are they truly indeed using their cash, or are they utilizing hard money? A lot of the times they're not using their cash. They want to have as much capital reserved to them as possible so they can continue to do future deals and do more of them rather than putting all their cash into projects. Another good thing with hard money is a lot of them will fund your reno costs. So if you acquire a property for $250,000, they'll fund that. They'll also fund the renovation costs. So if it's going to cost $100,000 to renovate that property, they'll actually add that in on top of the $250,000, making it a $350,000 total loan, and then give you the $100,000 to renovate the property. Now that comes with restrictions and guidelines, and you're gonna have to show your budget, and you're gonna have to show that you know what you're doing, and they usually give it to you on a draw, where they're not giving you $100,000 up front so you can run away and go to Mexico. They're giving it to you as you go along in the project, making sure that you're buying it and using it for the materials and the labor on that individual deal. So one of the big biggest things to keep in mind with a hard money loan is it should be a temporary solution to the bigger picture. If you're doing a fix and flip, hopefully you have an exit strategy where you have a timeline of what it's going to take you to complete the project and sell the project and be able to repay that hard money lender. And it should be within that time frame that they allow, that 6 to 12 month period, depending on the terms of that deal. If not, you may have to refinance out of that with a traditional loan to pay back your hard money lender. So you want to have an exit strategy and something that's not going to take a significant amount of time and tie you up with that hard money lender, because remember, you're paying a really high interest rate on something that you shouldn't be holding for an extended period of time. So whether your exit strategy is selling the property or refinancing, you should know that coming into it. A lot of these hard money lenders, they will have some penalties associated with going beyond the time frame allowed. So if you're going beyond the 6 months or the 12 months or whatever time frame that you'd agreed upon, then there may be some increase to the carrying cost of that. So definitely something you want to watch out for. But hard money is definitely something that a lot of people are utilizing, specifically on the investment side. If you guys have any questions, feel free to drop them in the comment section. I will do my best to look out for them. I love when you guys comment, so comment away, and I will catch you guys in the next video. Peace.
Yeah. Yeah. It's the return.